Marko here at Fair Realty, Victoria, BC. This morning, the Bank of Canada reduced the overnight lending rate for the seventh time in a row by another quarter point down to 2.75% overnight lending rate. What is this going to do to the real estate market in Victoria? Is it going to prop up sales? Reality is no one knows. We've had 7 of these consecutive rate cuts. 2 of them were the jumbo half a point cut, and the real estate market hasn't really done much. Sales, they're a tad higher than last year, but barely higher than last year. The problem is there's so much geopolitical uncertainty, concerns around the economy. Despite the rates coming down 7 times in a row, it's really not directly being correlated to increased sales. Also, you have to remember this primarily impacts the variable mortgages. So as of this morning, variable mortgages are down in the low 4% range. 5-year fixed mortgages are also down around the low fours. And keep in mind, compared to what we saw 3 years ago, this is still on the higher side of things. I mean, if you look at the last 50 years, it's very cheap money, but 3-4 years ago, people were getting variable mortgages at 1.5%. I had clients, I know specifically the house they bought in Saanich, they got a 5-year fixed, and this was 2020 or 21 with HSBC, a 5-year fixed. Mind you, it was insured mortgage for 0.99%, so 1%. And just to break down the numbers for you, if you take out $1 million at 1%, your interest cost annually is $10,000. If you take out $1 million at 4%, your interest cost annually is $40,000. So that's quite substantial. So I don't think the rates are quite low enough yet for people to start re-entering the market based on cheap money, specifically investors. I think if we get 3 more rate cuts this year and the variable goes into the lower 3s, that might start pulling some buyers off the sidelines who are running numbers and saying, okay, money is a lot more affordable now. It makes sense for me to buy this investment property. So on the whole, the 7th rate cut in a row, I don't think it's going to change much heading into the spring. We really need some geopolitical stability. This tariff trade war with the U.S., I think it's impacting consumer sentiment. And if people aren't confident, they're not going out and buying. And we're kind of seeing that. And despite 7 rate cuts, once again, sales have barely improved and inventory is starting to climb up. Inventory by May, June, we're going to hit a 10-year high. We are at a 10-year high for this time of year, but we'll hit an absolute 10-year high come May, June. That's it for now. Marko, Juras, Fair Realty.